Today, Ether continues its climb above $3,000. Morgan Stanley registers a spot Bitcoin ETF and a spot Solana ETF with the SEC. And Clear Street's Brian Dobson discusses his outlook for Bitcoin mining in the new year. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies are mixed this morning. As of noon Eastern, Bitcoin fell to the $92,000 level. Ether, however, rose 2%, and Solana's SOL token climbed about 2.5%. Now, the moves come as investors look ahead to key U.S. economic releases due this week. The December ADP private payrolls report is scheduled for tomorrow morning, and the government's monthly jobs report is slated for Friday. Now, John D'Agostino, head of institutional strategy at Coinbase, joined Squawk Box this morning to discuss what has been behind the recent price moves.
We're seeing a gradual rebuilding from this liquidity event we had on October 10th. The market makers are getting more comfortable with their risk parameters, adding risk back into the market. We're seeing retail sentiment catch up to what we've known on the institutional side. So retail sentiment catching up to institutional momentum. And really, we're just seeing the mean reversion trade I talked about. Bitcoin's outperforming gold this year. And together between gold and Bitcoin, you have this wonderful store of value trade that is really, really important. Because if you've held gold for the last 10 years, you've done pretty well, about 260%. You held the S&P, you're up about 300. But the dollar has decreased in purchasing value by over a third. If you've held Bitcoin for that period of time, you're up over 11,000%. So that juice is really, really important if you want to beat inflation over the long term.
Okay, let's talk about the top stories. Morgan Stanley wants to launch crypto ETFs. The banking giant filed 2 S-1 registration statements with the Securities and Exchange Commission this morning. One to launch the Morgan Stanley Bitcoin Trust, and another to launch the Morgan Stanley Solana Trust. Both offerings would be spot ETFs, and both would enter a crowded field of spot Bitcoin and Solana funds that have launched in recent years. The filings come after the SEC approved generic listing rules for spot crypto ETFs back in September. That development helped fast-track approvals for several digital asset products, not just Bitcoin. And since then, we have seen many spot crypto ETFs tied to altcoins, including Sol, Litecoin, and XRP, pop up in the U.S. Next, dozens of banks are urging senators to use pending market structure legislation to clamp down on crypto yield and rewards. As a quick reminder, the Genius Act, which was passed into law last year, bans stablecoin issuers from offering yield or interest to customers. The ABA says that provision helps prevent customers from putting their savings into stablecoins, which aren't protected by the FDIC. Well, now, the American Bankers Association sent a letter to the upper chamber on Monday, urging lawmakers to prohibit third-party affiliates and partners of stablecoins from offering these payments too. We are expecting Congress to take up crypto market structure legislation as soon as this month, after progress stalled at the end of 2025. All right, focusing on Bitcoin mining for our main story. Clear Street dropped its 2026 Outlook report for disruptive technology today. I spoke with Brian Dobson, senior analyst and managing director of disruptive technology at the fintech company, about his outlook for the new year. He breaks down what themes to look out for as it relates to Bitcoin mining and HPC data centers. Today, you're giving us a preview of what we can expect related to Bitcoin mining in 2026 in your new disruptive technology report, which was released this morning. Last year, we saw more Bitcoin mining firms move deeper into AI as a way to maximize profits, especially following the last halving event in April 2024, which slashed miners' block rewards, making mining less profitable. Well, since then, miners have been trying to leverage their existing data center infrastructure to meet the massive demand for AI computation power. Do you expect to see this trend accelerate even more in 2026?
Yeah, I think you hit it right on the head. You know, as we head into 2026, we're going to evolve from a thematically driven performance in the Bitcoin miners that are transitioning to AI and high performance compute into one that's based on real, actual results. These companies will be signing additional contracts. High performance compute revenues and cash flows will begin to materialize on the income statement, and we'll find these multiples expand, at least in our view, throughout the balance of the year. So we're very excited about it. We're moving from a position of enthusiasm and hope about the transition to AI to a rock solid, de-risked contractual revenue viewpoint for HPC.
Bitfarms is the most explicit case of a Bitcoin miner that announced plans to wind down its Bitcoin mining operations entirely to focus on AI infrastructure and high performance computing. An example of a Bitcoin miner you cover that is moving deeper into AI while still focusing on mining is CleanSpark. In its November earnings, the firm's CEO detailed a hybrid strategy combining Bitcoin mining with high performance computing. Since CleanSpark and Bitfarms are companies you cover, what's your outlook for these companies in 2026? And what do you think of Bitfarms' plans to fully abandon Bitcoin mining?
Yeah, so, I think you're going to see Bitcoin miners take one of two paths, right? Like CleanSpark, they can either use Bitcoin mining to subsidize their growth into HPC and to be able to modulate their power consumption with the utility that they're dealing with. So let's say there's an example where a utility needs one of these data farms to curtail energy consumption. It's very easy to turn off your Bitcoin mining operation, whereas it's nearly impossible to maintain a contract and turn down your energy consumption for high performance compute. That said, CleanSpark's able to do this because it is a best-in-class Bitcoin miner, whereas Bitfarms was a good Bitcoin miner. However, their megawatts are better suited pursuing HPC and abandoning Bitcoin mining ahead of the next halving event.
Now, you also have a note on CleanSpark out today, writing that the company is ClearStreet's top pick for 2026 as the firm transitions from a Bitcoin miner into a scaled AI platform. You also write that management is well positioned for success with secured power, execution credibility, and balance sheet flexibility. Can you take us through some of the other reasons why CleanSpark is what you call a top idea for the new year?
Yeah, that's right. It's very simple. CleanSpark was among the last of the Bitcoin miners to declare its transition into high performance compute and to devote the monetization of new megawatts to HPC. It's our viewpoint that it's among the most compelling valued at around 6 times 2026 EV to EBITDA and has one of the strongest management teams in the space. So when you take those two things, a really attractive valuation, highly motivated management team, and couple that with great assets, strong power contracts, and an excellent pipeline of future megawatts, I think what you're going to see is a successful HPC data center company and one that will be able to bring AI contracts to bear in 2026. And that should lead to multiple expansion, first to 9x as these are, announced, and then later more closely aligned with, call it AI infrastructure plays, which trade in the high teens to low 20s. So our price target on that stock is $27. That's roughly 120% higher than current levels, and it's our top pick for 26.
Interesting. Now, you also cover other Bitcoin miners like Riot, Hut 8, and Cypher Mining. What are some of the other companies in the space you think will stand out in 2026 and why?
Yeah, that's a great question. So in addition to CleanSpark, I also like Riot. I also like Cypher. I also like Hut 8. These are companies that have either announced contracts like Cypher and also Wolf, or they're on the cusp of announcing contracts like Riot, right? So I think that as we get to the end of the first quarter in 26, most of these companies, which have really strong track records of monetizing megawatts and producing results, will be able to sign contracts if they haven't already or expand on existing contracts. And that's why we like them so much here.
Now, I spoke with the CEO of Bit Digital, Sam Tabar, last week, and over the summer, the company, a former Bitcoin miner, converted its entire treasury to Ether. Well, since this is another company you cover, I'm wondering what you think about that move. And in general, what's your 2026 outlook for these publicly traded companies that function as digital asset treasuries?
Yeah, I really like Sam and Cameron over there at Bit Digital and White Fiber. I think that was a pretty savvy move, right? They separated what was a struggling Bitcoin mining business from their data center business, which investors really liked. And then they also pivoted the Bitcoin mining business to Ethereum, and that turned out to be an excellent move through the end of 26 and into 27. So there were definitely some doubters when that transition was announced, but they've certainly put those doubts to rest. We like both of those companies. We have buy ratings on Bit Digital and White Fiber for the balance of this year. And I really like the prospects of White Fiber's new data contracts, right? Not only are they looking for large scale data contracts in North Carolina, but they're also looking for, call it smaller scale data contracts in the Montreal area, which is great for, call it low cost, clean power out of the Niagara Power Basin.
Do you think we will see more mergers and acquisitions in the Bitcoin mining space in the new year? And if so, what are some of the reasons behind increasing consolidation?
Yeah, I think 26 will be a year of transition as many of these Bitcoin miners separate or reposition their Bitcoin mining businesses in order to complement or call it make a pure play for HPC, right? So when you see a company like CleanSpark, they're probably going to use that mining to supplement their HPC business, which is still under development. But more advanced companies that have contracts signed and substantial revenue that can support further growth in high performance compute will likely separate their Bitcoin mining businesses ahead of the halving in 2028. So there's going to be a lot of change in this business, which is, I think, the constant for these data centers over the past couple of years, right? Certainly 2 years ago, no one was talking about high performance compute for these guys. And 2 years from now, I think there'll be a much less of a conversation around Bitcoin mining for these guys.
And it certainly will be very interesting to see if that happens. But, also in your Outlook report out today, Clear Street argues that stablecoin payments and tokenization are driving growth of the digital asset ecosystem as it's shifting toward regulated infrastructure first models. What's your outlook for stablecoins and tokenization this year, especially as institutional adoption ramps up?
Yeah, no, there's tremendous institutional demand for companies that provide, call it the on-ramp for tokenization and for stablecoin. I think one of the really appealing things from my point of view for stablecoin is that it makes transferring assets so much easier. And that's the same kind of appeal that you have for tokenization. So anytime you have a new technology that really works and meets consumers' needs, there'll likely be widespread institutional adoption. And certainly there's a land rush there for these companies. So we're bullish on that segment as well.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.